Hi traders, my name is Zoran Kresovic. I'm the market analyst here at Eightcap. And what I would like to do today is actually provide a brief overview of last week's events in the markets, but also more importantly, what's gearing up for the week ahead. So how about we actually get started immediately? I've got some notes here that I would like to actually go through with you and then focus on the three takeaway charts for the week ahead and discuss it in more details. So the last week has actually been quite a busy one. Obviously, last Sunday and coming into Monday Australian time, we've seen a struck deal with UBS Bank and Credit Suisse. So the banking sector remains actually quite fragile. Credit Suisse being acquired by the UBS and focus now shifting to the Deutsche Bank because as you probably know or you are aware, it seems like actually that credit spreads have actually gone up quite high over the weekend, indicating there could be some uncertainty and some risk with Deutsche Bank. We are done with the major central bank rate decisions for now. So that seems to be a key headline as well for the last week as well, with Jerome Powell on Wednesday coming out and indicating or providing 0.25 interest rate rise in the US. Market was to some extent actually pricing a 50 basis point rise or interest rate rise as well. However, that wasn't actually the case. It's watch, see and wait scenario right now with the inflation, and we are looking to see in the unforeseeable future what will actually happen there. So the last point is actually Bank of England as well. So on Thursday, Bank of England came out and lifted the rates as well. The core CPI last week actually in UK came at 10.4% versus the previous 10.1% year on year. Consensus was 9.8%. So accelerated inflation in the UK, and as a result of that, we've seen another interest rate rise in pound. So pound was actually moving quite aggressively. It pushed up to some key levels, and I will go through the charts in a moment and discuss in more details, covering the fundamental and technical aspects as well. The biggest talking point on the floor right now here at Eightcap would be gold. So gold is actually just managed to basically hit the 2,000 level USD. It's quite significant. Absolutely. It's powering towards the all-time high between 2040, 2050 level mark. So gold is actually being highly traded asset here at Eightcap. A lot of clients actually, going for that safety hedge against the risk, potentially, profit on the quite high market volatility. So speaking of market volatility as well, VIX index actually last week was hovering around 20 to 25 USD dollar mark. So risk actually seems to be quite elevated within the market at this point in time as well. So quite a bit of volatility, and generally speaking, traders like to actually trade volatility as well because it's those bigger moves in the market. And if you do get on the right side of the trade, at times it can actually work favorably for you. So just to give a bit of a recap as well, in terms of some of the major pairs for the last week, DXY, so USDX, we're talking about the USD versus the top 8 major currency pairs. It fell actually 0.7%. We can see that here in the chart as well. So basically from all-time highs around 106 US dollars, US dollar has been actually coming off quite aggressively against all the major currency pairs. And we can see here lower lows with lower highs, and those long red bars indicating further weakness potentially due within the US dollar as we are actually coming more towards the end of the rate cycle in the US. And Powell came out and he was actually quite dovish when he came out on Wednesday, saying the terminal rate is around 4.1%, and we are moving into probably a more deflationary phase, with the US economic data coming out indicating probably a little bit softer landing at this point in time. So US is actually taking that into account, and we are seeing US dollar depreciate against the other major currency pairs. Also with USDX as well, if you're actually looking at the Fibonacci levels from the high of 106 up until the most recent low around $101. We can see Fibonacci, retracing around 38.2% in that downward channel. So if it was actually to further show weakness there and continue to go downwards, we would actually expect that next support level to be around 101 to 101 $1.50. So that's probably the key support level at this point in time. However, if something unforeseen happened and we see further interest rate rises in the US, or GDP figure coming out this week out of US as well, so we will pay close attention to that. We might be looking at next resistance level around 104 to 105 $USD. Okay, so keep that in mind. Also, the 50% of the Fibonacci level as well, around $104. So they will be looked after, in more details as well from those that are actually trading the pair mainly on technical analysis. Volume has actually spiked up a little bit as well. We can see the volume spiking up with those buyers coming in, this morning. But again, we need further confirmation if the upside was actually to continue. Okay, so the next pair that I would like to move or discuss is GBPUSD. GBP is been actually moving quite aggressively. Let's just move to the daily chart. I'm sorry if it's a little bit clutterish, but we're just trying to actually implement as much information as we can in the chart, so those that are actually trading on technical analysis can see how it's all actually unfolding. So as you can see, GBP is actually in consolidation phase at the moment. As discussed last week, Bank of England core CPI data came at 10.4% year on year versus the previous month of 10.1. That signaled obviously a rate hike from the Bank of England as well, and now the terminal rate sits at 4.25 basis points. Also, just to mention as well, Bank of England was actually one of the first banks to start with the interest rate rise cycle, and it might be the first one to actually end it as well. I mean, it will depend over the coming weeks on more data that comes out, but at the same time, it has actually started quite aggressively, back last year. So yeah, the market is actually kind of starting to price that in as well. We also seeing an upside resistance at the moment. What we're seeing is actually that $1.24 level mark. That handle seems to be a quite significant resistance with the support around $1.18. We're also seeing a falling flag pattern in a rising market overall, or as you would like to call it, or a lot of people do, sort of consolidation sideways move in GBPUSD. That's been happening since December 2022. So a lot of clients are actually monitoring and watching that quite closely. If pound was actually to continue going upwards, and then obviously the next level of resistance would be $1.24. If it was to break that high, then we could potentially see further upside on pound. In terms of the downside, as traders, we always have to look at the both sides. We have to look at the upside. We also have to have a look at the downside as well. We can see the downside around $1.18 mark. Fibonacci coincides with 38.2% as well, and the next level of Fib is around that 50% mark, which is $1.16. So for anyone that's actually thinks the pound will tip over and continue to go downwards, the levels to watch: $1.18, $1.16 on the upside. If it was to actually clear that 124 mark, then it could potentially start that short to medium term uptrend continue in the unforeseen future. So that's to do with pound. The last pair, or probably the pair that's mostly traded with Eightcap, given our tight spreads and super great conditions, is obviously XAUUSD. Gold has been a really good play against the hedge, as a hedge against the risk at the moment. So a lot of clients are actually looking into that. Just to provide some overall sector analysis or comments that I've got here. So precious metals have been being held by two forces: the flight to safety in the light of the banking problems. So a lot of that flow and a lot of the banking saga that's been going on has actually helped gold. And as we can see, we've got a quite aggressive move from the 1,800 level and coming all the way up to the key resistance around 2,000 level mark as well. And number two, it's actually falling yields as well. So with investors actually turning to safety and buying a lot of bonds. Obviously, the yields have come off quite a bit, and it's that inverse relationship between bond prices as well as the yield prices. So as clients are not getting enough return on investment, a lot of them are actually parking their money in commodities. And as we can see, gold and silver have been actually performing quite well for the last week, from that 1,800 level mark, significantly appreciated and hitting a 2,000 level mark. Now, just to actually talk about that right now, 2,000 level mark is actually a key significant resistance level. It's a well-known round figure, and it's also very close to the all-time high around 2040 to 2050 mark. Although, yes, it looks quite bullish right now, we still need to see whether it will actually hold above that 2,000 level mark this week. If it does, then we could have that next leg up and test the all-time high, which is generally, as a technical traders, it's actually quite a bullish move. But at the same time, if gold does not hold around 2,000 level mark, then we could see further downside, and we could actually retest that 1,800 level mark. So gold is actually appreciated over the last week approximately 10%, which is actually quite good. So for those that actually caught the move, they would be pocketing, or they would hopefully be profiting from those moves as well. The other point that actually is being discussed, it's actually Yellen as well. So Fed Treasury, she came out and she basically mentioned that no discussions on blanket insurance for depositors as well. So what we're talking about here is FDIC, any funding from clients to the banks, whether it's minor banks or the major banks, there is that threshold of 250,000 USD. So anything above that is actually unsecured with the banks. That's actually also playing a big risk in the market right now, and that's a big talking point as well. In regards to any other major currency pairs, just to recap as well, obviously pound appreciated. Euro also had a great week last week. Currency rallied 0.9% against the USD, 0.4% against GBP, and well-known figure 2% against the Aussie and New Zealand dollar as well, against the commodity currencies. So that's actually worked quite well for euro as well. Equities have come off a little bit, not to the extent that we probably expected. The reason for that is because we've been assured, or the market has been assured, that basically 2008 2023 banking saga is slightly different. So everyone is reassuring that the banks are prepared for the current issues or challenges a little bit better than back in 2008. Obviously, a lot more liquidity is actually being pumped into the banking sector as well right now. So, it looks like the equities are taking on that quite well, and we haven't seen those sharp sell-offs like back in 2008 or during the COVID crisis. Bonds, 10-year USDT yield fell 2 basis points to 3.38%, and also 10-year bond in Germany fell 0.2% as well to close at 137.667. Cryptocurrencies as well, two directions right now for those that love trading cryptos. Inflows due to money taken out of the banking system and into cryptos. So we've seen quite a bit of that as well. For those that love trading Bitcoin, we've seen quite significant upside, or the move has been quite bullish right now. Bitcoin seems to be actually consolidating at this point in time. But I guess on the contrary side as well, selling pressure when risk of moves occur as well. So at the time of writing, Bitcoin is approximately up 2% for the week, around $27,500. And Ethereum, interestingly, was actually down nearly 3% to 1,750 USD for the past week. And in terms of the week ahead, so quite a bit of actually data on horizon for the week ahead, and something to look forward to. We've got GDP figures, gross domestic product, from the US, from the UK and Canada later in the week, and we've got inflation prints from the Eurozone and Australia. We've got retail sales for those that love trading Aussie USD tomorrow, and we've got more data out of AUS as well, Australia, on Wednesday too. So quite a busy calendar for the week ahead. Hopefully you enjoyed this session. Please provide as much feedback, or if anything in particular you would like to see in the upcoming weeks, more than happy to take that into account and provide further analysis. Happy trading, stay safe, and I wish you everything and all the best. Thank you.